Just take a casual walk down any major city in America, and you will find yourself admiring the many luxury cars racing up and down the freeway. Makes you want to buy one for yourself, doesn't it? That is exactly what banks and dealerships exploit, resulting in debt worth millions. Basic economics teaches us the concept of needs and wants. Still, many people struggle to grasp this concept and indulge themselves in loans just to fulfill their wants. And while it does give you short-term happiness, in the long run, the resultant debt really hurts you. Speaking of which, in this video, we will discuss how the American car debt is exploding higher. Without further ado, let us begin. Current issues and problems. The American car debt issue is not something that suddenly sprung up and became a national issue. It has been on the rise in the United States for the better part of 2 decades. Before we understand how it has impacted America as an economy, let us look at some statistics. According to the Federal Reserve Bank of New York, Americans owe an astounding $1.4 trillion as car debt. Now that is huge, considering it amounts to nearly 10% of total consumer debt. In fact, auto debt surpassed credit card debt way back in 2011. Such alarming statistics are nothing when you look at the ground reality of the whole issue. Did you know that large numbers of people are 60 days or more behind on their auto loan payments, and many are also dealing with negative equity? But that is just the start of the many problems associated with American car debt. Like, for example, we have a rise in the popularity of 90-month auto loans. These are schemes that, due to the length of the loan taken, attract people as it will on paper result in a low monthly payment. But when you look at the bigger picture, savings may be eclipsed by the huge interest costs. This practice has serious repercussions, as it may reduce borrowers' liquidity and cause them financial hardship. Moreover, this issue has also worsened due to the increasing number of subprime borrowers who are able to secure auto loans. Since these borrowers are not ideally placed to pay off these loans, it results in even more debt. And if that was not enough, did you know that due to the shortage of vehicles caused by the pandemic, dealerships are increasing their markups significantly? As a result, purchasers can no longer afford cars at their previous price points, and many are opting for longer loan terms and larger monthly payments. This further increases the interest that needs to be paid, further increasing car debt. Effect on consumers. We have talked in depth about the various reasons that have led to the increasing car debt. Now let us talk about its implications for the main party affected, the consumers. As you can imagine, consumers have to deal with a lot of issues as a result of car debts. Like, for example, when they cannot pay off their monthly charges, their credit scores take a hit, making it harder for them to get new lines of credit or better interest rates on existing loans. But that is not all. The stress that comes with these payments can be quite exhausting. In fact, this stress can have a ripple effect on personal finances, reducing discretionary income and increasing savings rates. There have also been extreme examples of some borrowers who may have to choose auto payments over food or rent as a result of rising car prices and interest rates. This clearly shows how the increasing car debt is becoming a major problem. Solutions. So, with all these underlying issues and their resultant effects, what can we as consumers do? No, you shouldn't quit taking auto loans altogether, because it is a good tool if used properly. What you should do is watch interest rates and vehicle prices so you may buy at the best possible time. In fact, I have the perfect tool that would help you determine whether you should take that loan for financing a new car or not. Heard of the 20-40-10 rule? It basically states if you want to finance your car via loan, you should be able to afford 20% of the down payment on a car, and for the monthly cost to be less than 10% of your monthly income when a loan of 4 or fewer years is used. This way you can feasibly use these loans to your maximum advantage. Secondly, evaluate your financial situation and look into several forms of credit to see which rates and terms work best with your budget. Keeping that in mind, try to avoid taking out loans with extremely long terms, like the 90-month auto loan I mentioned. These are like cancer, so steer clear of them. Thirdly, be careful with your auto loans. Just follow the basics, like you should be careful of the penalties for not making payments. Trust me, these fines are just pointless money waste. Do not overlook them. I hope that clears everything on the American car debt. If you are also stuck in car debt, I suggest you follow all that was discussed in this video. Other than that, I can only wish you good luck. That is a wrap on the video. Like and subscribe to the channel. And if you like this one, you would surely love our video about cryptocurrency. Do consider watching it. And as always, if you have any queries in regard to America's car debt, do let us know in the comments down below.